Are you ready? It is time for KMB Talk. Welcome, everyone, to another episode of KMB Talk. I am your host, Kerry Michael Bennett. Today, we have the special guest in store for you. InsurTech, FinTech, what do you know about these topics? If you're like me, you probably heard the terms, but don't know that much at all. Today, we have the CEO, founder, and chairman of Insuritas, Mr. Jeff Chesky. How are you doing today, Jeff?
Doing great, Kerry. Thanks for having me.
Absolutely. Thanks for coming on the show. You know, I have a lot of questions to ask, and I honestly believe our viewers and listeners are going to get a lot out of this particular show. But, I mean, goodness gracious, it seems that a lot of what you're doing today, you might not have known it was coming when you began this journey 15, 18 years ago, but talk about the perfect setup. So let's start at the beginning. Insuritas. What is Insuritas?
Well, what we've tried to do is reimagine and re-engineer the way consumers shop and compare and buy the products that they need to manage risk. We normally think of them as insurance products, auto insurance, home insurance, business insurance. They're our primary focus, but life insurance, pet insurance, and the industry of insurance distribution has been tied to legacy strategies that go back to the late 1800s. So what we try to do is bring technology and a good ear for what the consumer, the customer is looking for, and try to reimagine the way they could shop and buy a product that everybody has to buy from somebody every year. Insurance is a lot like food. You've got to get it periodically. And that's been our primary focus, to literally change the customer's experience with insurance products as they move through their lives.
So, you know what, when I think of insurance, and I'm sure many of us feel this way, is I think, okay, so I'm 43, and I think back to becoming a young adult, and my parents introduced me to their insurance agent. And lo and behold, I became a client. And 15 years later, I'm paying my premiums. Thankfully, no accidents. But I'm paying my premiums, and then I get a notice one day from the agent. Hey, I'm retiring. I'm selling my agency. Here's your new agent. Same building, same phone number, same group. And I read the letter, looked at it, said, this doesn't affect me, and went about my business. And it was about then that it occurred to me, I'm not shopping for insurance on an annual basis. I can't tell you if I'm getting a good deal or not. And because I haven't needed the insurance, again, thankfully, I really can't say that they're there for me in the way I think they should be if I do have an accident with my auto or my home. You folks are really doing something exactly the opposite, in that when I'm shopping for insurance through your product, I'm getting to see many major carriers provide me a quote simultaneously.
Yeah, the whole issue of how people come of age and look at the insurance shopping and buying experience is a fascinating look at the way some very traditional businesses either reimagine and re-engineer themselves or go away.
Right.
As you describe it, 2 generations ago, you got introduced to your parents' local insurance agent, and the agent had one of 2 characteristics back in the day. They were either what they would call an independent agent.
Okay.
And by nature, they said to you, I'm going to shop your insurance with multiple carriers and see if I can get the best product, best coverage at the best price. There's another class of agents. They're still in the marketplace today. They're called captive agents, State Farm, Allstate, Nationwide, Geico. Are carriers that distribute their product, but only their product. So if you went to the State Farm agent to get your insurance, they would only present you with a State Farm quote. You understood that going in.
Right.
The challenge for the industry is not just when a consumer would get a notice that their agent of record was retiring, which would cause them to say, gee, maybe it's time for me to think about whether I've got the right partner, the right advocate to working on my behalf. What really was the sea change in the industry of insurance distribution was the startup of a little company that was literally in bankruptcy called Geico.
Okay.
So there was this old legacy insurance carrier, and there was a fellow named Warren Buffett, and he loves insurance, and he loves insurance as a business because insurance carriers collect millions and millions of premium dollars. You know, you insure your home and your car, or you pay $1,000. Well, that money goes to an insurance carrier, and they just sit on it. They invest it, put it to work, and wait for the day that you might need to have some money back to pay a claim. So Warren Buffett has always said, boy, I love insurance because it gives me millions of dollars to go buy railroads, go buy shipping companies, go buy other insurance platforms, because there's so much capital coming in that doesn't cost me anything. Gary's paying his insurance premium. I take that $1,000 in and I put it to work until I have to pay a claim. Actually, Warren Buffett hired a man, a wonderful man that just passed away about 3-4 years ago called Jack Byrne.
Okay.
And Jack built Geico. And what he did for the first time is he said, I'm going to go direct with auto insurance, and now it's a lot of other coverages, but I'm going to go direct to the consumer for auto insurance, but I'm not going to have the costs of agents and local offices and brick and mortar and local billboard signage, all of those expenses.
Okay.
I'm going to run a highly efficient insurance carrier. And the famous message that Geico led with was what? What does Geico say 8 times a day? They spend $1.6 billion a year messaging. What's the simple statement Geico makes every day?
I'm guessing the 15 minutes or more.
You betcha, Carrie. That's exactly right.
Wow.
You give me 15 minutes and I'll save you 15%. Brilliant marketing.
Yeah.
Brilliant marketing. And in the moment, he transformed an industry, because that's what really caused millions of consumers to ask that simple question. What do you mean? If I talk to you for 15 minutes, you can save me up to 15%. I pay $1,000 a year to insure my home and cars. 15% or $150, that's real money.
That's real money.
How can that be? Right? How can that be? Because I've had an independent agent for the last 10, 15 years, and their job was to keep an eye out for me. I thought to represent me, to go to market, to get the best coverages at the best price. But boldly, Geico stood up and said, give me 15 minutes, I'll save you 15%. And then that begs the question, how could they say that to 300 million Americans with a high degree of confidence that they could actually save consumers money on their auto insurance? So how did they pull that off?
Oh, my gosh. How? What was the reaction?
Sure, right? How do you come in and say it's fascinating, right?
It is.
What's the obligation for an insurance carrier? Well, you described it a couple of minutes ago. You know what? I pay my premiums, and I hope I don't have a claim. But when I do, I want to make sure that the insurance carrier covers my expenses. I totaled my car. It's a $22,000 Toyota Camry. And I need a car tomorrow, and I don't have $22,000. So I want my insurance carrier to come in and write a check to get me back into the same similar vehicle within hours, within days. So how in the world could Geico say to consumers, I'm going to charge you 15% less than State Farm or Allstate or Progressive, all of the carriers that have been around for decades, and say boldly, I'm going to save you money if you give me just a little bit of time. And what happened was that the industry discovered that a little, I call it a secret, the story that was the backstory to insurance distribution from the 1930s up through the early 2000s, when Geico really exploded on the scene, was that in fact agents had been getting coverages for their customers year over year with insurance carriers, but not necessarily shopping for the best price for the best coverage. Just kind of curious.
Very.
Because that's what we as consumers thought. Well, my agents, they're out representing my best interests. But let me ask you, Carrie, when's the last time your agent has called you up, texted you, sent you an email and said, hey, Carrie, I noticed that your insurance premium went up $65 from last year. And if you don't mind, I'd like to take the liberty of going out to shop your coverages to see if I can save you some time and money. When's the last time your agent made that call or sent that email to you?
Well, listen, you're asking a very point-blank question. The answer is I have not received that call, email, text, smoke signal, grocery store, nod in the parking lot. I haven't.
And to all of your listeners, Carrie, that's a very curious question. When's the last time your agent called you up and said, hey, I noticed your premium up, because it goes up every year. It may go up 2%, 3%. I think the average premium increases for insurance carriers nationally is about 3.5% a year. So you say to yourself, well, that's really curious. And now Geico's telling me that if I give them 15 minutes, I'll save 15%. Now, let's go back to the car that you're insuring, right? Let's look at that $22,000 Toyota Camry.
Okay.
And Geico says, I'm going to insure your car, Carrie. Now, let's say your car doesn't get totaled. Let's say that the whole front end is racked and there's the front end's got to be rebuilt. A new engine's got to be put in the car. When the car goes to the repair shop and the car repair shop, the body shop, generates an expense for getting your car back to where it was before you got in your accident, do you think that they charge Geico a different amount to repair your car than they might charge another carrier like State Farm?
I'm assuming the answer is no.
That's exactly right.
Wow.
Guy running the body shop says, hey, look, I don't care who your insurance carrier is.
This is what it costs.
I got a cost to fix Carrie's car. That's exactly right.
Wow.
So Geico and State Farm pay the same amount of money to get your car fixed.
Okay.
So if, in fact, Geico can't save money by getting your car fixed for less, how can they still save you 15% in 15 minutes?
You're asking me. I'm supposed to be asking you questions, Jeff. Okay, so let me answer.
Right?
Law of large numbers, right?
No, sir.
Oh,
What
okay.
happened?
Okay.
Well, what happened, Carrie, is it's fascinating, but the truth of the matter is that for the last 20 years that you've been an insurance customer, there have, in fact, been carriers that have been willing to offer you the same or better coverages for the insurance on your home and your cars than you're currently paying.
Now I get it.
No one's been going out and shopping for you.
You know, Jeff, so I'm so fortunate I get the opportunity to speak with leaders from just a wide variety of industries. And more often than not, there's common denominators that come up throughout the conversation. And I am a student of disruptors, love studying disruptors. I think they're very healthy for a wide variety of reasons. But when I'm listening to you speak, it's easy for me to want to assume what comes next. But here's my question for you. What were the legacy agents and operators? What was their response to the Geico 15 minutes or less may save you 15% or more? Because as a consumer, I don't feel, well, you asked when was the last time someone reached out, and the answer is never. Did they sit quietly and say, hey, I think the bulk of our existing clients aren't going to notice or challenge us to up our service levels or challenge us to, to demonstrate that we are providing them the best deal. What was the legacy response?
Yeah, so it's really interesting. And I'll tell you, when I think about the vision for our company here, and we think about why do we get up every day, we always say to ourselves, we're going to look at the experience through the eyes of the consumer, of the user.
Right.
If you get that right, your business should do well. And I use, it's going to be a little bit of a crazy parallel with you, but stick with me for a minute.
You got it.
I look at what Uber did with taxi cab drivers.
Yep.
Right? Everybody needs transportation to go from point A to point B.
Yep.
Until they generate, they actually build and deploy, self-driving cars. You need an operator for the vehicle. And Uber, for the first time, reimagined getting a consumer from point A to point B in a vehicle with a driver, but an entirely different experience that was focused entirely on the customer gets to pick the time and the location they get to be picked up. They get a picture of the driver and they can verify the vehicle with the license address. They get into the back seat of the car. There's cold water waiting. The car's clean. They get to choose the music they'd like to listen to.
Yep.
And then they never have to reach into their pocket, pull out their credit card. They say thank you to the driver when they're at their destination, and they walk out. What a brilliantly different experience from hailing a cab in downtown New York. Now go back to our challenge with our business and the question you asked, which is, well, Jeff, if in fact thousands, I think 400,000 people are licensed as insurance agents in the United States, how did they respond to disruption? And frankly, their response in many cases was just like the New York City taxi cab drivers. You run to the regulators. They're not playing fair. You run to the community and say, gee, what about us poor taxi cab drivers?
Right.
They run to elected officials and say, oh, stop this. It's not right. And in the case in my industry, some of the financial institutions that bankrolled the medallions that you needed to buy to drive a cab, they went under.
Yep.
Because in spite of the pleas of the taxi cab industry to stick with an old model out of loyalty, out of legacy, out of, entrenched behavior, consumers ultimately said, I'm going to move to a solution that works better for me.
That's right.
And in that same way, Kerry, the independent insurance agency system, as you and I knew it 15, 20 years ago, it is or has gone away. The truth of the matter is it looks a lot like the local drugstore of 30 years ago or the local hardware store. We as consumers, we voted with our fingers. We voted with our cars. We drive into Home Depot. There's 23 aisles of products needed to improve your home rather than in the old day. I go to the hardware store, and then I go to the lumber store, then I go to Sears and Roebuck. And then after I make 4 stops, then I go back and begin my home improvement project. The little independent agent, at the end of the day, spent some years complaining about these interlopers like Geico, complaining that the system wasn't going to support the consumer when they had a claim. Oh, my gosh, you're going to have to call Geico when your car's broke rather than calling Bobby, your neighbor, that's your agent.
Right.
Well, at the end of the day, Bobby would have to call the carrier and say, fix the car.
Right.
In the case of Geico, they'd say, well, we are the carrier. So the business, the old legacy system has been in collapse, just like the taxi cab industry, as a new solution that is consumer-facing has emerged, which we call ourselves alternative or next-generation distribution platforms, the same way Uber and Lyft think of themselves as next-generation transportation solutions. Really fascinating to us as we think about our reminding ourselves of the importance of keeping the focus on vision, focus on what the consumer wants, knowing that, there's legacy solutions, maybe not as successfully consumer-centric as the customer would have expected, so there's a chance for disruption, and that's what we do every day.
Well, yeah, and we're seeing the same thing in financial industry, the financial services industry. There's always been the assumption that when a child comes of age, they ask mom and dad, where do you bank? And it's a legacy family. We're not seeing that anymore. I remember this particular bank in East Texas that I was familiar with, and gosh, this is about a year ago. And one of the managers was telling me that the child, who was in their, I don't know, early young 20s, had come into some money, and subsequently those funds are now living in PayPal. That's their bank account. And as a banker, it was really perplexing for the bankers, okay? Because they're sitting there going, this is not a bank. This is not a bank. From the consumer perspective, it's every bit of a bank.
That's exactly correct.
Yeah, I saw something the other day. And I think it was the financial brand. It may not have been. But they said, look, we need to rename the checking account, okay? No one's writing checks anymore. What's the appropriate name? But to your point on the the Uber, and I was about to say Airbnb, same story, right? Completely disrupting the lodging industry, completely disrupting it. And Uber disrupting the taxi industry. As a matter of fact, Monday I flew to Texas, and it was I think I got in about midnight, and I got my baggage and I walked out, and there were a line of taxis and the drivers were leaning against the cars just waiting. And everyone from the flight had their phones out and already had the Ubers lined up, just walked right past the taxis, straight to the Ubers, away they went. I almost felt bad for the taxi drivers. I really did. But what do you do? I mean, when these disruptors come, it's really a response to the customer experience. At least every successful disruptor story I'm aware of, what they got right was literally the customer experience. I like the fact that the customer... Go ahead.
You're exactly right. And what's really fascinating is the traditional response from those being disrupted is that the experience won't be as good. You're getting, you're paying less, so you're getting less. And it's fascinating. We get up every day and say, well, we're selling a product. The customer has to buy it, unlike an Uber. If you're not traveling, you don't need a ride.
Right.
If you're not going on vacation, you don't need VRBO.
Right.
You got to buy this insurance. And I think, frankly, the industry has done itself a horrible disservice when these insurance carriers, like Geico, say, my insurance is cheaper than the next guy's insurance, and my insurance Progressive. We're cheap, and State Farm, we're going to save you an average of $450. These crazy claims, because they've decided that as the industry has changed, that the consumer, as they change their ways, that it's all about just cheap. It's all about cost.
Right.
And the truth of the matter is that I would pay more money for Uber because of all of the things related to the experience.
That's
the
right.
Ease of ordering the ride, the ease of identifying the driver, the comfort and the cleanliness that comes from someone that's driving you in a vehicle that they own. The fact that the environment, cold water, a newspaper,
right.
The fact that the driver will engage you or not. Those we find in our company when we think about consumer-facing deliverables, what we've concluded is that in our business, the insurance industry, it's a lot or all about price and cheap insurance. And sure, we save people money because we shop across multiple carriers, and we'll do it every month if that's what the customer wants, just to have the peace of mind that they're getting the right coverage at the right price. But we remind ourselves that there are three cornerstones to what we do with our customers. Number one, we act as professionals. And I think a lot of companies forget how important it is to reinvest, to train, to teach, to coach, to mentor your team so that they can embrace their responsibility as professionals.
Right.
The second cornerstone of our commitment as we attempt to disrupt the vertical is to recognize the importance of empathy. When's the last time you walked in, whether it's a restaurant or into a branch of a bank, and you felt that you were talking to someone that understood, cared what was important to you?
Right.
And the third is purpose. If you provide this professional experience with empathy and purpose, more often than not, people will never thank you for saving them $110. They'll thank you for giving them a comfortable, confident experience.
I agree.
So that's what we do as disruptors. We not only change the experience for the consumer, but we recognize that the easy call in any kind of disruption is, well, we're the cheaper alternative. But I think at the end of the day, the true, real legacy disruptors, the folks that really get it and succeed at it, are the ones that say, yeah, boy, price today, if you live by price, you're going to die by price. But if you provide a consumer-centric experience that is supported by professionals, driven by empathy, and committed to purpose, you end up with customers who come back again and again.
Well, okay, so let's shift gears just for a moment. Let's talk about the company itself. Am I correct to declare that as a consumer, I can't go and buy my insurance directly from insuritas.com?
Oh, that's correct.
Okay,
yeah,
so
we're not a B2C.
That's right.
Model.
That's right.
That's
You're
yep.
B2B. So let's talk about this for a minute. You're providing a white label solution primarily to the financial services industry, so banks and credit unions.
Well, for your listeners, here's kind of the way, I don't talk about it a lot, but here's the way I thought about this as I imagined creating, saying to my wife, I'm going to quit my job as a banker and I'm going to go start a company and hang on.
Okay.
I started with the simple premise that insurance is a product that everybody needs from somebody. They buy from somebody every year. Now, you have one of two options when you're trying to get a product as a distributor to the buyer. You can either go direct or you can go what I would call indirect.
Okay.
I'm going to give you a good example that I felt passionately about years ago, and it's come to pass today. Years ago, Home Depot decided to put lawnmowers in their stores. And I don't know about out your way, but in city after town across America, there were these stores owned and operated by John Deere.
Okay.
And the only place you could buy a John Deere lawnmower was in a John Deere dealership.
Gotcha.
So think about it the same way with a little agent, right? Well, the only place you can buy insurance is from a little local brick and mortar agent. And it made sense for decades, as you described it, us in our early days, our parents and our grandparents before them. But then at some point, somebody said, well, let me try to reimagine the customer shopping experience for all things related to maintaining and improving a home. So this Home Depot idea pops up. And one of the things you need to maintain a home is a lawnmower. And for years, John Deere said, we'll never put our lawnmowers in Home Depot because our distribution model is B2C. John Deere makes it, we set up our storefront, and we sell it. Until one day, and I'm not going to get the data points right, but one day, so the story goes, someone at John Deere in the executive suite said, our sales continue to fall off,
Yep.
and our competitors' lawnmower sales are going through the roof. Why is that? And someone simply said, Home Depot.
Yep.
And what happened was that the lawnmower manufacturers that competed against John Deere said, well, I got an option. I can either go to the consumer direct or I can put my lawnmower in somebody else's store where consumers are already showing up. So as you point out, my company, we said every consumer in America buys this product from somebody every year. I can either spend millions, billions like Geico and say, call me directly. Don't have that kind of money, and frankly, I think it's an incredibly complicated challenge. The alternative for me was to say, I wonder, unlike a local agent, if I wanted to build a national distribution platform for insurance, I wonder if there's somebody else's store where I could set up an insurance aisle, just like the lawnmower guy set up a lawnmower aisle in Home Depot.
Yep.
And we then asked ourselves, I asked myself, well, there's 300 million Americans. They all buy insurance from somebody every year. What storefronts have massive amounts of consumers visiting them day in and day out? I said, boy, one of them is financial institutions, banks and credit unions.
That's right.
Everybody's got to have a bank or a credit union someplace, right?
Right.
Where it manages their finances. Now, a couple of things about insurance that are a little different than lawnmowers. One is that the product's underwritten, right? You know, John Deere will sell a lawnmower to anybody. Home Depot will sell home lawnmower to anybody that can, you know, got the cash or a check or a credit card. They don't care other than your ability to pay. Well, with insurance, it's a little more complicated than that. Like with banking, everybody'd like to borrow, but the bank doesn't like to lend to everybody. You're
Right.
underwriting repayment risk. Insurance carriers, you're underwriting claims risk. Kind of the same characteristics. So we said, boy, wouldn't it be nice to be in somebody else's store where there's lots of customers, and also if that store understands what it's like to underwrite risk,
Right.
and is a place where people understand that they may be asked non-public information,
Right.
may be asked personal questions they're not comfortable answering, you know, at a backyard barbecue. So banks, again, became an interesting place to say, not a bad place to set up a virtual insurance agency. And then third, and what's proven to be most fascinating, and I think banks are just at the very front end of figuring this out, is it's one thing to have a lot of customers. It's another thing to have an environment or a store where consumers are comfortable answering more personal questions,
Right.
because you're going to decide how to price their risk. But the third thing is, how often do the customers come into the store? Right? At Home Depot, I go into Costco every Saturday. I go into Home Depot probably every 6 or 8 weeks. One of the things with banks that is fascinating in terms of an opportunity for them is they get millions of people visiting their digital storefronts every day because of this wonderful thing they built called online banking.
That's right.
So we said to ourselves, 300 million Americans buy it. Millions of people's eyeballs visit the bank's websites every day so we can talk to them digitally. We're in a store where risk and underwriting are things that consumers expect. So that's what we did. We created virtual, private labeled insurance agency aisles, digital aisles inside other people's stores. And our store of choice is a financial institution, a bank or credit union.
So I am the CEO of Bennett Bank in Anytown, USA, and I'm needing, just like any business, to continue to grow. So in this particular case, I'm looking, team, we really need to increase our non-interest income, okay? And while we're having this conversation around the board table, the executive table, my mortgage lender is preparing a loan, and as part of that loan, that mortgage loan, that client has to go shop for insurance. Wow. I mean, it seems so obvious. It really does. So now, with the partnership with you folks, now I have Bennett Insurance Agency, and I'm able to provide a quote to my customer that I'm providing the mortgage for.
Oh, that's exactly right. And the parallels to what we've described over the last, hour here while we're chatting, right? In the old days, you went to the hardware store, but then they had to send you out to the lumber store.
That's right.
In order to build the shed in the backyard. The banker would say, well, I'm going to give you the loan to buy your home or your car or your business, but you've got to leave the bank, go across town, repeat the same information you gave me to the insurance agent, buy the insurance product, and then come back to me, and then I'll give you the money to go buy your car or your home. Crazy. And not in a bad way. It's just the way it was.
Well,
that's what disruptors do. They look at the ecosystem as it lies and goes, oh, this is not consumer-centric. And you try to challenge yourself to reimagine a way. In this case with, Carey Savings and Loan, Bennett Commercial Bank, you're sitting there going, you don't have to leave my store anymore. I provide a product and a service you got to buy in order to get the loan product you walked in the store to get. and you've got a one-stop shopping experience. It's what Amazon does, right?
That's right.
You're going to buy the flat-screen TV. What about the wall mount and the remote? Well, you don't go to Best Buy to go get that stuff. You say, no, I'll put it right in my shopping cart.
Hey,
That same logic.
That's right. That's right. I literally have bought a book and maybe a bed and running shoes, and get this, a replacement belt for my vacuum cleaner in the same transaction on Amazon. Seamless, right? Seamless. Did not.
That's the point. And now a bank, in our particular case, a financial institution is probably never going to get in the business of being a florist or being a travel agent or being a car wash place as an extension of its business model.
Right.
Amazon is an end-all, be-all, very unique that way. But we think that the next generation of businesses are going to fill out around their core vision. And Uber's the perfect example. Well, I solved the transportation problem for the consumer. I got the driver, I got the vehicle, and I got someone to point A to point B in an entirely wonderful consumer-centric experience. But then he went back and said, you know what? The consumer may want to get some takeout.
Right.
But the pizza guy or the restaurant, and they create Uber Eats. Same guy sitting in his car. He's no longer transporting the person. He's transporting their dinner, door to door, predictable in terms of picking it up, getting it warm, delivering it to your doorstep, and no money changing hands again. In that same way, the bank's sitting there going, I underwrote your loan. I'm approving your ability to buy your home. I can't let you buy the home unless you've got insurance on my collateral, the house you're buying. By the way, I'm going to transform my lending activity to bolt on an insurance capacity,
right,
so you don't have to leave the store. Exact same parallel.
Wow. And I think it's also, so we're talking about a mortgage experience, but then let's move past that. And what I've discovered in banking is more often than not, it's that frontline teller that knows more about that client than anyone in the organization. They know if the dog is sick, if the kid is, performing well in school. They know all of these things. Who's getting married and why and when. And in researching for the show, I did see the list of carriers was just incredible, but I have to admit, I'm ignorant in a lot of areas. I did not realize that wedding insurance was a thing. Okay, so again.
That's because you're happily married.
Oh, right. So Bennett, let's go back to Bennett Commercial Bank, because I liked when you said that. It had a nice ring to it. So Jeff, you're my customer, and we're due your mortgage. And hey, guess what? We have the Bennett Insurance Agency. We are able to provide the insurance for you. But what happens is in 2 or 3 months, you come in and say, but not to me, but as your mortgage lender, but to a teller getting ready to plan for my daughter's wedding. That teller now can say, Jeff, the same company, us, that we sold you this insurance for your home, we can also get you wedding insurance. And what I like about this is that if my teller, and again, I'm using this as an example, if they are familiar with everything that's available, they're able to add value to their customer's day by letting them know what options exist.
Yeah, now let me ask you something. Have you ever shopped at Home Depot?
Absolutely.
Okay. When you walk into an aisle at Home Depot, what do you find? Who's there? There's a Home Depot employee, and what are they wearing?
Orange smock.
An orange apron, right?
Apron,
exactly right.
Yep.
Now, I think the parallels between what they built it as the cornerstone of the Home Depot experience ties out to what you've just described in the bank branch on the teller line. Now, if you went down the paint aisle and you caught the person that's running the paint aisle and you had some paint-related questions, and they said, sure, Carrie, here's the gallon of flat white, I'm going to mix that trim paint, and here's the 2 brushes and the roller and the tarp you need. And then you turned to the person in the orange apron and said, and you know what? I also need a new fixture for the faucet on the sink in the bathroom. What would the guy in the orange apron normally do for you?
The ones that I have interacted with have blown me away. It seems they're experts on literally everything in that store, but in the absence of that, they stage a warm introduction to their counterpart.
That's exactly it. Then that's the power of Home Depot. What they were trained to do is to say, look, I'm an expert in my aisle. I'm at the teller line. My job is to cash your checks. My job is to, make sure the cash drawer balances at the end of the day. My job is to take your change. Right? I've got things I'm expert at in my aisle, the teller line,
right,
or in the paint aisle. And the brilliance of Home Depot was they didn't want you to be an expert in every aisle, but they wanted you to know about all of the other aisles in the store. And what you just said is exactly the way I describe it. And initiate a warm handoff, a warm transfer. And in fact, up until the last 2 years, where Home Depot's been a little challenged with its service systems, it was always a requirement that that orange aproned employee would take you from the paint aisle, walk you down to plumbing, say, hey, Jake, this customer, Carrie's got some faucet questions. And Carrie, here's Jake. He's the expert in the plumbing aisle. And in that same spirit now, insurance is really strange because if you think about it, Carrie, if you went 10 years ago and said, all right, I need to get my auto and home insurance, and then your wife said, Carrie, we need some life insurance, where would you have gone to go buy your life insurance? Who would you call?
Right. Well,
you'd call a different agent.
Yeah,
You'd say,
a different agent.
I got the expert for my auto and home insurance, but there's a life guy. They work for Mass Mutual or for Lincoln Life. What about commercial business insurance? That's another agency. Yeah, what about employee benefits for Bennett Commercial Bank? Well, that's another agency.
Altogether.
Another group of experts. Insurance was horrifically, highly fragmented, and I could spend an hour explaining why, but it became an ugly experience for the consumer. So what we do at Insuritas is we say to ourselves, we're going to deploy a digital white-labeled agency virtually inside a financial institution store. We're going to help the employees to understand that the agency's products and services are now available to all of their customers and try to help them understand that there are not only, in the analogy to the paint aisle at Home Depot, there's not just flat white ceiling paint going on there.
That's right.
On the high aisles and the low aisles of that paint aisle, there's some pretty weird stuff. I, as a guy that does a lot of work around my house, I don't buy some of that stuff, but I walk in the paint aisle. I wonder who uses that, and I wonder what it's used for.
That's right. That's right.
And that gets back to your question about wedding insurance. Who'd have guessed?
Wow.
But when someone's sitting at the branch talking to the teller at the drive-up window, gosh, Billy Bob proposed to Jeannie Mae yesterday. The family's thrilled. One of the things a well-trained teller can do, particularly with our model, is say, well, we've got the Bennett Commercial Bank Insurance Agency. And along with all the products that you need to protect yourself and your home, your business and your family, we've also got these other products. Some people like to protect against medical costs with their pets.
Right.
Some people like to protect themselves in the event that all the money's been laid out for the wedding, but at the last minute, Jenny Mae gets cold feet.
Oh.
And the wedding goes away, but you're an unsecured creditor. How do you get your money back?
And it happens.
Yeah, so
it happens.
Creating that one-stop shopping experience for all things insurance, that fully stocked paint aisle at Home Depot, our vision is to bring professionals, people with orange aprons, experts in their aisle, with empathy and a commitment to being concerned about the customer, and with purpose, making sure that the customer's needs have been understood and been satisfied.
What an interesting story. Next question. Okay. You, if I understand correctly, you sold this company before.
Well, that's true. I'm a late stage entrepreneur.
Late stage entrepreneur.
Well, I'm a little older guy. Most guys, they take risks when they're young, and I have a lovely wife. She has a very successful law practice, and the story is stranger than strange. We had just had twins, just bought a I love houses. And I live up in the Northeast and bought in an old mill town, a big old house that was built in the 1920s, and it needed a lot of work. And I said, well, let's buy that house, and I'm going to fix it up. And by the way, we're going to bring twins into the world. And by the way, honey, I'm going to leave my banking job and start a company.
Oh, my goodness.
And so it went. And yeah, to your point, I had a vision. I think entrepreneurs describe it as an itch that they just have to scratch.
Right.
You can't sleep, you can't eat, you can't.
That's right.
You can't hold a conversation. And that's what I did. I said to my wife, I got to do it. I'm sorry. And, if worse comes to worse, I'll go work as a car salesman. We will never miss a mortgage payment, but let me just get at this. And I started the company in 1999 with a wonderful partner, Sam Hanmer. And we got some traction with the business. And out of the blue in 2004, a big public company called up out of the blue. I actually wasn't familiar with them and said, we've read about you, heard about you. Are you for sale? And my first reaction as a banker was I was open back in the day when you had the Wall Street Journal as a paper on your desk. So I'm talking to the owners of the company, the CEO of the company, and I'm looking because they're publicly traded. And I said, well, with all due respect, sir, your company's trading, I think it was about 32 times trailing earnings. And I said, I think my EBITDA is about $10,000. So you can multiply my earnings by 30 or 300, and I've got no reason to sell. And anyway, long story short, he said, well, we've got a lot of money and we're paying private equity multiples for startups just to get into some new business line.
Got you.
So, yes, to your point, I had a life event and was transformative. And as entrepreneurs say, hit a long ball. And the company that acquired my business owned it for 4 years. I think we were the second of 19 acquisitions they made in 18 months.
Oh, goodness.
Wonderful, wonderful owners. I did a little consulting, and then I was in retirement. And they took basically the way I describe it is they took a beat-up Volkswagen that I'd kind of put together with paper mache and airplane glue and rubber bands. And they said, all right, they brought it into the garage. And as a lover of NASCAR and motocross, they came out 3 years later, and they opened up the garage. And, they had a fine-tuned Ferrari sitting there coming out of the garage. They took the company and just transformed it. So I was just awestruck, saying, I can't believe that they took my beat-up old VW and turned it into this finely tuned machine.
Right.
And I just assumed that they were going to run it around the racetrack and win a lot of money and win a lot of races, do very well. But then the financial recession hit in 2008, and they panicked, as a lot of companies did. And I got a call from their CEO saying, would you like to take the company back?
Wow.
We got to get out of any business that's a distraction. So that's how the company came back to be in my portfolio, my family's portfolio, and how we own it today.
So you were able to enjoy just a few short years of retirement.
Well, my wife and kids would say, to your listeners, whether it's Sumner Redstone or Warren Buffett, some guys, they just can't retire, and frankly, I think I'm one of them. The kids always say, my son, my oldest boy, works for me, runs a big part of the company today, and the running joke in the family is someday someone's going to walk into my office and I'm not going to be moving, and they're going to poke my arm, and they're going to go, geez, I think he finally stopped breathing, and they're going to roll me out of my office feet first because I've tried retirement, and it doesn't fit me well.
Right.
So, and as you can tell, I'm a bit of a peddler, so I leave the operations to smart people, and I go out and talk to bank and credit union CEOs and share my story and my vision, and that's what I love to do, and that's what I do every day. Matter of fact, I'm jumping on a plane later today to head out to Phoenix for a couple of meetings over the next 2 days.
Phoenix, Arizona. Goodness gracious.
Yes, sir.
Well, Jeff, yes, I really appreciate the time that you've taken to join us for the call. I mean, I'm a big fan. Just to kind of let everyone know, as I've had the opportunity to be on the other side of the table when you were giving a presentation to a bank before, and just it's one of those stories that when you're listening to it, it makes all of the sense in the world in that moment. And simultaneously, I'm thinking, why didn't I think of this? And what cracks me up about that is I had, back in October, I had the opportunity to spend some time with Mitch Lowe, one of the Netflix founders. And he had some comments very similar as far as disruptors, right? And really the best companies out there that fall into that category, he says, it's a really good one whenever you look at it and you realize it's so simple of a concept why did it take this long for someone to come up with this? And that's exactly what we're seeing here with what you and your group are doing.
Well, Kerry, it's wonderful to talk to you, and it's an honor and a privilege to be invited onto your show. The work you're doing is fabulous. So on behalf of me and the entire Insuritas family here, we thanks for the airtime, thanks for the curious and intellectually engaging conversation, and we just wish you the best. We think that these kinds of opportunities for you to pull back the curtains and provide insights to your listeners as you look at businesses, entrepreneurship, and disruption, it's a great thing that you're doing.
Well, I appreciate that very much. And hey, without pulling the curtain up, there's a chance we might be creating something pretty interesting soon. So I'm telling you, it's just an amazing time out there right now. It truly is. So Jeff, thank you so much. Take care. Safe travels.
Yes, sir. Thank you. Best of all. Appreciate it, Kerry.
You're
Bye-bye.
welcome. To all of our viewers and listeners, that was Mr. Jeff Chesky, the founder, chairman, and CEO of Insuritas. And I probably said that incorrectly a few times on the show. If that's the case, I'm sorry. Until next time. Thank you for listening to KMB Talk. You don't have to click home, but you can't stay here.